take you through the key numbers. TCS Q4 results are out. The PAT is coming at 9,930 crore rupees. It was expected to come in at 9,890 crore rupees. Revenue, remember, was seen as at 50,070 crore rupees. Let me take you through what the numbers are. In fact, they are flashing at the bottom.
Just take it from there. While the PAT, of course, seems largely higher than estimate, because at 99.30, it's definitely higher than what the ET Now poll was penciling in, which was about 98.90. But I think, Pankaj, you would agree with me here that for TCS this time around, it's really not about the PAT or the revenues. It's about margins and margin protection alone that the street is focusing in on.
Absolutely.
Because
and what their outlook
you
is.
have, yes, exactly. Because remember, attrition has been a key concern with the entire industry. And now with most employees getting back to office, with travel costs, etc., as well included, that is something alone that's going to weigh in heavy on TCS's margin. So that particular number is the key thing that the street is going to be looking out for. Just to put it into perspective, remember the stock actually went in absolutely flat ahead of its earnings. This at a time when the rest of the IT pack was hugely underperforming today. Everything from HCL Technologies to an LTI to a Coforge to all the other stocks were rank underperformers. TCS went in absolutely flat. A dividend announcement as well of 22 rupees per share, highest ever order book, wherein the TCV stands at $11.3 billion in the fourth quarter.
Right. So I have some numbers more to give and share. 50,591 crore is the revenue number. That's versus 48,885. So that's the first number. Highest ever order book is what the company has delivered. I think you just mentioned about the TCV number at 11.3 billion. The operating profit margin has come in at 25%. When TCS talks about operating profit margins, it's the EBITDA margin that they're talking about. Their general range is between 24 to 26 odd percent. So they are in line with that. Net additions of 35,209 odd number. The EBIT number on your screen, it's coming close to about 12,300 odd crores. Expectation was close to 12,500. So as Aisha pointed out that, this is a number which was broadly what the street was going with. Okay, I have some more details with me. Aisha, BFSI segment has grown 2. Anisha is also with us. She's at the location. Anisha, first reaction, revenues in line, EBIT marginally lower, but when I say marginally, it's absolute marginal.
Well, actually, I think it's a good set of numbers. If you look at the constant currency growth on a quarter-on-quarter basis, that has come in at 3.2%. The rupee revenue at 50,591 is better than our expectation. Dollar revenue at 6,696 is bang in line with what we were expecting. The operating margins, as Aisha also was pointing out, was the key thing to track this time around. And they have managed to sustain the margins at 25%, and that's the key positive. And don't forget the TCV number, an $11.3 billion number coming in as far as TCV goes is very, very strong. Whether you look at it in terms of the net addition that they have done, or whether you talk about the other numbers coming in terms of the headcount as well. Attrition, however, continues to be a problem. On the LTM basis, attrition has come in at 17.4%. Remember, last quarter, this number was 15.3%. So there is a big jump when it comes to the attrition. However, having said
could
that,
have read the basic numbers, no?
Right, we have a first set of guests with us. Omkar is with us, as well as Sandeep. Sandeep, let's start with you. First reaction, you want me to read out some numbers, or you have seen that? Revenue is at 50,591, operating margins at 25%, TCV deal signing continues to be one of the highest. Attrition they've given for the year, that's about 17%.
No, I have seen the numbers broadly. It is a very good set of numbers to start with. Although I am really disappointed with the LTM attrition number, because if for TCS it is 17%, then we can imagine what will be the situation for the industry. But otherwise, if you see, the margins are bang in line, the revenue numbers are slightly higher, and all the metrics are good. TCV is very, very strong. But this is what we have been saying in our preview also, that this quarter is not a quarter where problem is the orders. The demand is extremely strong, and that is the reason the attrition is so high, because there is huge demand for manpower also. The challenge is that, in this quarter, the only number which will matter is which company is able to manage attrition to what extent. And even margins, I don't think is something to monitor, because most of the companies have started taking price hikes, so margins will be managed well. The challenge is the attrition and what is the commentary around it. That is the only monitorable in this one.
Sandeep, stay with us. We've also got on board Omkar Tangsale as well, joining in on the show. But before I take it across to Omkar, just some management quotes coming in from the press release we're just picking up. Rajesh Gopinathan, the CEO, saying that we're closing FY22 on a strong note with mid-teen growth and adding the maximum incremental revenue ever, increasing participation in our customers' growth and transformation journeys, and an all-time high order book provide a long and sustainable foundation for continued growth ahead. I think what I want to definitely read is what the word is from the chief HRO, that's Milind Lakkad. He's saying with the highest ever net addition this year, consistently highest talent retention, benchmark talent development metrics, continued focus on health and well-being and numerous industry awards, we have reaffirmed TCS's position as the #1 employer of choice. So not really talking about the attrition numbers, which like our expert as well was just marking out, has been a little bit on the higher side. Samir Seksaria, the CFO, is saying while continue to make all the investments needed to support our growth aspirations, we managed the headwinds this year to deliver an industry-leading operation margin yet again. The successful completion, he says, of our 4th buyback in 5 years is another milestone in our shareholder-friendly approach to capital allocation. Omkar, how are you reading into the numbers?
Yeah, I believe the company have reported a strong set of numbers. The demand scenario, as Sandeep is correctly saying, they remain very, very robust and strong, intact. Of the expenditures on automation is continued and likely to continue to do so far. Even margins we can expect some bit of impact, but margins are quietly stable, which shows a strong execution in terms of TCS for it at this kind of a size that they are looking for. Yes, definitely attrition remain key concern, and because managing staff and skilled staff has become a task, one should monitor. I mean, one should focus on the management to how they are going to manage the attrition levels and execution part for the timely delivery of the projects that they are going. Otherwise, if you can see a number as a whole and consistency over the period, it looks to be strong and likely to continue for next 2 to 3, at least for 2 years going ahead.
Some more details coming in. The IT services attrition, as we understand, continued to climb, reaching about 17.4%. However, incremental attrition has actually moderated. 17.4% is the figure for FY22. What's still amiss in the details is that they've not given the Q4 FY22 attrition, and I guess that is where the problem lies.
Yeah, so maybe, we'll get some more color. Presser is just about to start. Of course, we'll be covering in the presser. Okay, Anisha is telling me that she has some more insights. Meanwhile, we were talking to our guest. She has done some more number crunching on segments on various spaces. Anisha, any further value add on the numbers after the initial take?
Well, yes, I did want to point out in terms of the segments, it is the retail segment again which has seen a growth of around 21%. However, if you look at the technology and communication segments, they have lagged a tad bit at around 15.5% and 14% respectively. The manufacturing and BFSI continues to be strong and over 15% growth coming in there. Separately, in terms of the geographies, and this is important because North America has seen a jump of around 17.5%, which is in line with expectations, slightly lower when you look at the quarter-on-quarter number, but it is continental Europe which is showing signs of slowing down a tad bit, because Europe is up around 15%, though last quarter this number was close to 17 to 18%. So perhaps it is the impact of the geopolitical tension that you can see in the number. But as I was pointing out, the key takeaway from the number is the fact that the attrition was at 17.3% on an LTM basis, and the deal pipeline of $11.3 billion is very, very strong, because remember earlier we were talking about how deal win pipeline might plateau a tad bit, might stagger, but that has not been the case at all, and they have signed 2 mega deals this quarter. So I think just attrition is something that we'll have to watch out for, but other than that, it's a very good and very strong number coming in from TCS this time around as well.